hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Lohia from ICICI Securities Limited. Thank you, and over to you, sir.
Yeah, hi, Shruti. Thank you, and good afternoon, everyone. Thank you for joining us today for the concluding call of Mishra Dhatu Nigam Limited for the financial year FY25. First of all, I would like to thank management for providing us the opportunity to host the call. From the management side, we have Dr. S.V.S. Narayan Murthy, Chairman and Managing Director, Mr. T. Muthukumar, Director of Production and Marketing. So without further delay, I will now hand over the call to Dr. Murthy for the opening remarks. Thank you, and over to you, sir.
Yeah, good evening. Good evening, all of you. To all our respected investors, colleagues from here with me. I am joined by our Director of Production and Marketing, our General Manager Marketing, our GM Finance, our AGM Finance, and Company Secretary. So we are pleased to welcome you to this investor conference call. The detailed financial results for FY 2024-25 have already been disclosed, and they are all available with you. So I will not go into that line by line. However, I would like to take a few minutes to highlight some of the key operational and strategic milestones that were achieved during the fiscal year, which we believe mark an important step forward for our company, MIDHANI. To begin with, Q4 of FY 24-25 has been particularly significant. We have achieved our highest ever quarterly turnover of 410.56 crores, registering a growth of 1.25% over the same quarter last year. More importantly, the value of production during the quarter stood at 329.16 crore, reflecting a growth of 16.78%. We are also encouraged by the profitability numbers for Q4. PBT rose by 13.37% to 77.16 crore, while PAT increased by 21.04% to 56.14 crore over the corresponding quarter of the previous year. Coming to the full year performance, FY 24-25 has seen MIDHANI achieve its highest ever annual turnover of 1074.1 crore, registering a growth of 0.13% over FY 23-24. While the top line growth appears marginal, it must be seen in the context of shifting product mix and an industry landscape where raw material volatility and global supply chain uncertainties have been a constant challenge. The EBITDA for the year stood at 248.97 crore, showing a healthy growth of 11.1%, and our PAT for the year rose by 20.61% to 110.07 crore compared to 91.26 crore in FY 23-24. One of the key operational highlights of the year was the improved control over production inventory, which had been on an increasing trend in the previous years, as you would have remembered. This year, inventory levels decreased by approximately 8.5 crores, please make a note of it, contributing to more efficient working capital management and a reduction in debt. Another notable development has been our export performance. Exports have grown nearly threefold this year compared to FY 23-24, excluding deemed exports. This is a clear indicator of our growing global presence. We have also begun diversifying our alloy offerings, including new grades for our healthcare, oil and gas, and energy sectors. The impact of these efforts will be more visible in the coming years as production scales up and customer relationships mature. On the capital investment side, we have undertaken a CapEx of 50 crore this year, which has gone into strengthening manufacturing infrastructure and commissioning new facilities. Our order book position as on 1st April 2025 stood at 1832 crore, providing good visibility for the coming years. So in closing, I want to sincerely thank all our investors and stakeholders and for your continued trust and support. With these few introductory words, I now open the floor for your questions and will be happy to take all your questions from me and from my colleagues. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Dipen from Phillip Capital. Please proceed.
Hi, thank you for the opportunity, sir. So my first question is to understand a little bit on the business environment that is there. So recently we have come across some news articles regarding some reduction or other restriction in the supply of some rare earth materials and critical materials from China. So I wanted to understand what are the critical materials that we import from China right now, and how do we plan to manage that, considering that especially for the defense sector there has been a restriction on the same. That's my first question.
Okay. See, many of the raw materials that go into production of these materials landscape of MIDHANI, particularly the super alloys and titanium alloys, some of the master alloys that we use for manufacture, they are imported. Okay, but as on today, we are not having any import of any of the raw materials from China. And even if we want to import, there are enough non-Chinese suppliers. So it is not of a concern for us.
Got it, sir. That's really encouraging. Sir, second is for going ahead, how do you see the business and the top line panning out, and how do you see the margin expansion? Do you see any margin expansion happening in the following year?
Yeah, see, basically it goes like this. If you look at the strategic departments of aerospace, defense, and atomic energy, more and more programs are coming, and more orders will be coming in future. And MIDHANI is the only with respect to super alloys and titanium alloys, this is the only plant that has more than 40 years of experience in these material supply of these super alloys and titanium alloys and high strength steel. And we have a very big opportunity in this space, being an old timer and being the storehouse of more than 500 alloy grades that has been indigenized by MIDHANI. We are the leaders in this area, and I feel there is a significant opportunity for us with respect to the order book position, with respect to the new orders or new projects that Government of India is taking. So we don't expect any issue with respect to the potential new customers, and we are sure that we will be able to make a healthy top line as we are suggesting in the coming years.
So any headline growth rate or something that you'd like to represent?
Headline growth?
We are planning about a 20% growth every year. Okay. So now, due to this Atmanirbhar and a lot of initiatives taken by the government in indigenization, we are in effort in developing so many alloys and metals for our strategic sector, as CMD has told. So we are expecting about 20% growth every year.
Got it, sir. Thank you so much, and all the best for FY26. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Abhishek Kumar Jain from Alpha Accurate. Please proceed.
Thanks for the opportunity, sir. So my first question on the RM side. So just wanted to understand that what are the key raw materials which are used in your production, and how is the impact on because of the fluctuation of the price? How it impacts the margin?
Okay, this is raw materials. You know, we import pure elements to manufacture super alloys or titanium alloys. We import a number of raw materials, like for example, pure nickel, pure cobalt, moly, tungsten, chromium. Okay, so there are a number of alloy elements. Similarly, we also import a number of master alloys in the process of alloy manufacture. For example, aluminum, vanadium master alloy. There are different grades with these different kinds of raw materials and master alloys. How the variation in the prices affect us? Yes, there has been volatility, as you know. There have been some geopolitical issues. There has been up and downs in the raw material cost. But now I think it is more or less becoming uniform. There is no big problem, and we don't anticipate much issues with respect to that. previous years there was some issue with the increased raw material costs that has affected us, our balance sheet. But we are feeling that now it is more or less stabilized, and we are confident that the same trend will continue.
So in addition to that, about 23 raw material which we have been importing it, now we have taken a lot of steps in developing some of the master alloys indigenously, in 3 master alloys we are successful. So in addition to that, we are taking a lot of steps in salvaging our scrap and getting the part of the raw material through that. So apart from getting imported this raw material, we are also on the way how to salvage our scrap and how to indigenize some of the raw material. So as such, there is no problem in getting the raw material. And the future also, since expecting that some problem would come maybe in another 5 years, 10 years, a lot of steps being taken in MIDHANI to overcome that. So there should not be any problem in supply of raw material, and which will cater the requirement of our production needs and increasing the sales.
So are you exploring any plans for the dedicated scrap processing or recycling plant to improve cost efficiency and the sustainability of the margin?
Yeah, there are efforts already in place. For the last couple of years, we have been in touch with some government agencies as well as some national labs. Okay. We are working closely with some of the CSIR labs on how to extract the precious materials, precious elements from the scrap, high-valued scrap that we have had. So already that we have, in collaboration with the national labs, we have worked out, and this is giving very encouraging results. So we will be self-sufficient, if not fully, at least we will not be having the crisis of not having some of the critical alloying elements that are likely to be, that are presently being imported. So that way we are taking step by step. We have started already in a very positive note, and as our Director of Production and Marketing has told, we have indigenized one of the master alloys, and we are in the process of indigenizing some of the other master alloys that are required for making advanced titanium alloys for aerospace grade.
Okay. So, sir, if we see the EBITDA margin numbers before FY24, that was in the range of 25 to 30%. But in the recent past, it has come down. So can we achieve the old margin of that 25 to 30% kind of the range in the medium term? Because of that, because of this operational efficiency, you are taking efforts.
This EBITDA margin does not depend. It also depends upon the products which we make it. Say whatever earlier which were there, the product range was different, where we have been producing mostly for space. Now the environment slightly got changed. Most of the orders we are taking on a competition trade with the private parties and imported parties. So now that is why our EBITDA has come down. But we are looking forward in all the efforts. We are looking all the ways to improve our EBITDA by reducing our raw material costs and other factors. If you see the last year compared to 23-24, 24-25, if you see our raw material consumption has come down by 100 crores. That is also partly because of raw material price and partly because of our operational efficiency also. So same effort will continue in coming years also, so that EBITDA will grow up. But seeing the business environment where a lot of competition is there, so our EBITDA will be waving around 20 to 25%.
20 to 25%.
20 to 25 will be waving around, depends upon the product rate and depends upon the imported cost that point of time. So it will be around 20 to 25%.
Okay, sir. And sir, what is the production capacity of the newly commissioned titanium plant, and which key sectors or clients you are targeting towards?
The titanium plant recently has been commissioned. It has been put into full-fledged operation. The capacity, it will be about 250 to 300 tons per month.
Okay. And how much revenue potential that plant?
Titanium has got a huge potential. We are having a lot of orders in both the aero sector and the defense sector. Okay, so there has been a lot of this thing, but there have been some disturbances in the supply of raw material, especially on the master line. So last year we could not able to make, as CMD has told, that we could able to indigenize some of the master line. So coming year there will not be any problem in fitting. So we will be able to cater all the requirement of titanium because order is huge and our production also is coming in a full way and we will be able to meet the requirement.
Okay, sir. And my last question on the export side, as you mentioned that this year the export growth was 3 times. So what sort of the potential you are looking for the export side in the near to medium term? If you are targeting around 20% plus growth of the next 3-4 years every year, CAGR growth, how would be the need in export versus domestic?
As same as I told in the open market, last year we had done 94 crores, which itself is a threefold improvement over the previous year. Okay. Now we are in the process of getting certification by some of the overseas customers. Say when a major customer like Safran G, so many fellows will be coming and they started certifying, inspecting our plant. So we also, because of this geopolitical situation and the overseas also, there is a lot of time taken for supplying the material. Because of that, all these overseas customers, they are looking to MIDHANI for the supply of the material. And we also improved our turnover time drastically. So we also look a lot of growth will be there in the export in coming years. So those are right now the order position is about 35 to 40 crores. But further growth will be there in this year also will be booking. And there could be a possibility that definitely will be crossing about 100-120 crores in the coming years.
In FY26?
Yes, 25-26.
Thank you, sir. That's all from my side.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Rakesh Roy from Boring AMC. Please proceed.
Hi, sir. My first question regarding, sir, your order book is nearby 1,800 CR. So can you give me the breakup between defense, space, energy and others?
Yeah. So this is the breakup of 1,800 crores. So we have the percentage-wise, defense is about 84%. Space is about 8%, energy 2%, and rest of the things about 3%, and exports we have about 2%. That is the breakup of total as on today. And it will go, yeah. So we are expecting more orders, which may be going up. And we are anticipating good number of orders from aero, navy, missile, space, and power.
Okay. And sir, my second question is, how much order inflow we get for this FY25, the total order inflow in FY25? And from where?
Yeah, we are expecting approximately around 1,500 crores we are anticipating as on today. So there are orders that are already in pipeline. There are different stages of procurement process. Basically, we are expecting big orders in aero. Okay, aero and space. Okay, so and defense, navy we are expecting a big order. So they are all in pipeline. About 1,500 crores we are expecting.
And sir, how much order inflow we get in FY25? Total order inflow in FY25.
Yeah, we have already booked about 1,400 crores.
1,400 crores, sir. Yeah. Right, sir. And sir, last question, sir, regarding your Rohtak plant, how much is the order? Because last time as you mentioned, we have to nearby left 100 CR order book in Rohtak plant. How much is left for as on now for Rohtak?
About 10 crores. Yeah.
Order booking at Rohtak, it is about 10 crore only. But there are orders on the way. We have been trying to take some of the TOTs from the reputed institutes. Through that, we are trying to book more orders. We may, during the course of the year, we may get another 30-40 crore order. We may end up with the 50 crore order booking in the financial year 25-26.
So we are looking at nearby 50 CR for FY26 for Rohtak plant. New order.
We are aiming it, but sales maybe we may end up with maybe 30 crore.
Okay. Sir, Rohtak plant is only for bulletproof this one, or we make other things also there?
No, Rohtak plant is for both body armoring as well as the vehicle armoring.
Okay. Only for body armoring and vehicle armoring, no other things.
Yeah. It is only for that, yeah.
Okay. And any other new any plan to add any new product in Rohtak plant, because the order book is very less and we have the order not come, then ideally the plant is not running, no?
We are exploring this itself. There is a scope for improving a lot. We are exploring more orders, and we try to establish a better technology so that more orders can be taken under Rohtak.
Okay. And sir, the one thing is when on a HAL call, they have mentioned that you are working with HAL for some product.
Yes.
HAL, yes, sir. And how much the market size you looking from that product in near future, and how is there?
HAL, they are in the process of indigenization of some engines. We are associated with HAL. Right now, we are having order about 650 crores. So, but that order again, another 300 to 350 crores, it is in the process. And year on year, on the same product, there is a possibility that we'll get more orders from HAL.
Okay, more orders from. And as you mentioned, is your new titanium plant facing some raw material issue? So major raw material is the titanium.
Yeah, it was.
Okay. It was. Or the plant capacity, as you mentioned, is 250 to 300 tons per month.
Yes.
Okay, or they will make only titanium, sir. So generally we are importing.
Yes, they will make only titanium.
Generally we taking raw material from import or just from India only?
Sponge, main sponge, it is being imported. That alloy, that master alloy, it is now we are indigenized in the last year. That will be taken from India. Indigenous.
Okay. And sir, any chance to, because the PTC industry has also started their this one titanium thing, so any chance to you take from raw material from PTC or any other thing, sir?
No, we have established our source of raw material, and we have developed other parties also. So we are self-sustained and we need not depend on PTC.
Okay, right, sir. Okay, sir. Thank you, sir. Thank you.
Thank you. Before we take the next question, we would like to remind participants to press star and 1 to ask a question. The next question is from the line of Raj Rishi from DCPL. Please proceed.
Hello. Can you hear me?
Yeah.
Hello. Yeah. What is supposedly the Prime Minister also talked about massive growth in aerospace MRO over the next few years. So how will that impact MIDHANI?
See, one of the prime products of MIDHANI is one of the lines is super alloys. And super alloys are the essence of any aero engine. And if more number of MROs or MRO units are established, more business for MIDHANI. So we look at like that.
Okay. And sir, if US and India go for a RDP, a reciprocal defense procurement, what's going to be the impact on MIDHANI? Hello? Hello, can you hear me?
Yes.
Hello?
Yeah.
Yeah.
We are still under discussion. That still we are not really assessed what would be the impact on it. So maybe in the course of time we will be able to tell you what will be the impact on it.
But sir, prima facie, at least my perception is going to open up a huge market for MIDHANI. Is the perception correct?
Yeah, your perception is correct. But that again we have to take it up with the concern and we have to work out what will be the real impact on it.
And sir, this Europe rearmament of Europe is going to be it's supposed to be a very big amount over the next few years. So how will MIDHANI be affected? Should it benefit MIDHANI?
With respect to export orders?
You are telling with respect to export order, no?
Yeah,
So probably we look at like this. See,
This year we have about 95 crores of exports. Okay.
Okay.
And we are getting these orders in open tendering process. So we are already competitive in international market. And elsewhere in Europe, there are difficulties because of the supply chain constraints. So we have a very good opportunity. We have increased almost threefold in the current, 24-25 we have increased the exports. So we expect to continue the same trend because we are competitive and people are looking at us as a reliable supply partner. Yeah. So already we have people from international aerospace makers like General Electric, OEMs have already they have come and they are in discussion with us. Okay, they are listing our plants and we are in discussion with them. So we hope that our order book position from exports also will be proportionately higher in this financial year.
Something like 3 times this year also compared to last year.
3 times maybe a little more ambitious, but certainly it will be a better figure. That is maybe 120 to 150 crores. That is what is our target.
Okay. And sir, MIDHANI is also involved in this Kaveri engine, right? The development.
Yeah. Yes.
And what sort of can you give a perception as to how it will benefit MIDHANI, the engine, if there is a force to develop the engine as some people are talking about?
See, we are the sole supplier of these metals and alloys for this Kaveri engine. Once it comes through, then whatever the requirement of metals and alloys, it will go through MIDHANI only. So MIDHANI will be benefited a lot because we already have developed a tested that those metals and alloys for Kaveri engine.
Probably I can add to whatever the Director of Production and Marketing told. There are nearly 100 alloys of aerospace grade that were type tested. Alloys for aerospace have to be type tested for repeatability and reproducibility. So MIDHANI over the last maybe 2 decades has established more than 100 type tested alloys which are useful, like for example for Kaveri engine programs. So technology is available with us. It is only a matter of time that they have to place order with us.
Okay. And sir, how competitive you are compared to your peers in the Western world, like price-wise and otherwise?
Yeah, we are competitive in super alloys. Yeah, and this is a specialized business. Okay, both super alloys and titanium alloys is a specialized business which is practiced by very handful of people around the world. And making alloys to the requirement of aerospace grade is an art. Okay, so that we have mastered that art and we are quite competitive. Otherwise, we would not have got that nearly 100 crores export orders this year.
Okay. Thanks a lot.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Aman from Profit Gate. Please proceed.
Hello. Hi, sir. Am I audible?
Yeah, audible.
So I have 3 questions. Firstly, as you report in your annual report, can you give me breakup of FY25 revenue segment-wise, defense, space, energy, others? Maybe percentage or absolute number, both works.
Yeah. So revenue-wise, we have sector-wise space. We have contribution from space is 11%. From defense, it is 37%. PSU, another 37%. Energy is 1%. Exports are 9%. And all miscellaneous is about 5%. So the major change is PSU.
Okay. And so, right. As you highlighted in the call earlier, EBITDA margins from the space sector are higher than other segments. So as the revenue from aerospace segment is decreasing and the order book also has lower share of aerospace, keeping raw material prices as constant, can we improve the margin from here on, or the margins would be at FY25 levels, or it will decline?
See, as I told you that now our EBITDA will be to the range of 25%. Okay, EBITDA will be to the range of 25%. Okay, So since we are going to improve on the sales volume, revenue turnover, then our profit on that percentage will go up. So in that process, PAT, PBT also will go up. But our EBITDA will be in the range of 25%.
Okay. So can you highlight the differential gross profit margin in space and other segments that you have? A rough idea?
In space, earlier we had a higher margin, but in the defense, so much of margin is not there because now whatever it is getting earlier imported, they are trying to cut the cost comparing to the imported because they are also indigenous, and in the cost part of it, our defense sector is trying to do, or aero sector is trying to do, that we have to match with the imported cost. In that process, our margin is not so high compared to space. But still, we are trying to optimize our process and reducing the raw material consumption. We are trying to improve upon the margin. That is what we are doing. But as such, order booking margin is not so high as it was there in the space.
So can you highlight the differential margins between space and other segments, maybe defense?
Figures we are not one-to-one, we are not worked out. But as I told you that in this defense or aeros, margin is slightly less compared to the space.
Okay, sir. Yes, that's also. Thank you so much.
Thank you.
Thank you. The next question is from the line of Abhishek Kumar Jain from Alpha Accurate. Please proceed.
Thanks for the opportunity again. Can you give more details on the new alloy development, particularly those aligned to the aerospace application and the ultra megawatt power plants for the plants like BHEL?
Yeah. Okay. There are, for example, ultra supercritical thermal power plant. We have developed one of the alloys in association with one of the government agencies. So that is which is capable of withstanding very high temperatures and pressures in tubular form. So multiple agencies are involved in this particular developmental project, and we have successfully made in the raw material form that is required and product form that is required, meeting all the requirements, and we have supplied also. So that is with respect to the ultra high supercritical boiler, and with respect to aero, there are multiple grades. Actually, the aerospace, there are multiple grades of materials that we have indigenized and supplied to so we have supplied to HAL as previous speaker asked. Good amount of order is there in that, and we are developing many more alloys, new alloys, because our core strength is alloy development. So that is what we are doing.
Okay. And sir, how much nickel, cobalt, and the titanium accounts for your RM? How is the sensitivity with the price change of these materials?
This is price. There is a sensitivity. Okay, but about 10 to 15%, there is always change over the price. Okay, from the previous purchase and the present purchase.
Okay. And so just wanted to understand that how is the concentration of the RMs, especially nickel is the major part or the titanium?
There are both are two different.
Yeah, both are two different. I mean, for example, titanium is used for making the titanium sponge, but is used for the manufacture of titanium alloys. Nickel is used for the manufacture of super alloys. So both are two different verticals altogether, and of course both are critical raw material. And MIDHANI has portfolio of both the products, both nickel-based super alloys as well as titanium alloys.
So, sir, as you mentioned that you are targeting an EBITDA margin of around 25% in the coming years. So, just wanted to understand what would be the key driver for the margin. Is it because of the better uses of your scrap and reduction of the inventory, or the better mix, business mix?
One, as I have been told, that we are a business maker. More than that business maker, that we are also trying to utilize more of scrap, and we are also optimizing our facility, and which will have an impact on the yield. we are also looking for some sort of a capital investment which you have a better ability. So in this process, our yield and other parameters also will get improved. Because of combination of all other factors, only that product and other optimization of our process with respect to the new investment, with respect to the usage of scrap, with respect to optimization of parameter, all will lead to this EBITDA, achieving the EBITDA of about 28%.
And how would be the capex in the for 26-27?
Capex last year we invested about 45 crore, okay, 50 crore. Now this coming year, this we are planning to invest about 75 to 100 crore every year. That is what internal investment. But at the same time, we are in discussion with other partners for having a long-term project to have which get invested in the period of 4 to 5 years. So this also is under discussion. Maybe next quarter we may have some idea how we will go about it.
Okay. And my last question on that outlook: how do you see the outlook of the business post this the recent war, Operation Sindhu? So what kind of the visibility has come and how the order book has opened for your business? How did it change the entire perspective?
Okay. See, because some materials that were used in the recent operations have been supplied. MIDHANI is part of those materials, and one of the good things that has happened is it has been demonstrated, live tested, so that shows immense confidence to people. And after seeing the performance of our products, we are expecting many more orders from the defense.
Okay, sir. Thank you. That's all for me.
Thank you. The next question is from the line of Rakesh Roy from Boring AMC. Please proceed.
Hi, sir. My question regarding again for order book, sir. As you mentioned, you have total order book 1,800, and out of nearby 84% is from defense. Yeah. In defense, sir, how much is? Can you give me the breakup between the Air Force, Army, Navy? How much is there for Army, Navy, and Air Force?
It is 650 crores. It is 650 crores. 50%, 50%.
No, I think we are. Individually, we have. I can give you. I mean, put together, but I think individually, I think
maybe 50% will be there. Okay.
50% from Army and 50% from Air Force.
No. It's not Army.
It's not Army. It is from a naval sector and air sector. Air Force is can go to HAL, and HAL we get the order, and that's what this is order is booked.
Okay, right. Agree, sir. Sir, regarding, sir, as you mentioned, so out of total revenue, 34% is for nearby 37% for defense and 37% of a PSU. Can you give me the basic idea how much is for defense only? Only for defense, including PSU.
Yes. Yeah, some of the PSU units are defense PSUs. Yeah, so I mean.
74%
total. Probably you can. Yeah, probably if I look at the data, around 70 to 75% will be defense.
What for defense, sir? So as you said, if you are checking your last 5 years, 7 years history, whenever the defense revenue is increasing, because from FY19 your defense revenue is there by 30%, now it is 70%. So margin will come down. If you see your order backlog is there by 84% again for defense, so is it very tough to sustain this margin or to maintain this margin, or margin will come down in the future also because.
In the 2 years back and all, when we are having the space sector, more sales from the space sector, then we were having the 35, what you have witnessed is 35-40% EBITDA margins, 35% EBITDA margins also.
Agree, sir.
Now currently the defense and PSUs are contributing around 70% or more, and the space is definitely currently compared to the 3 years before figures, then definitely it is less than compared to that. Definitely the margins we are having more margins on the space sector compared to defense sector. So that is why we said that the EBITDA margins we are expecting around 25%, but when we increase the volumes, it may go up slightly, marginally it may go up also.
Okay. And sir,
EBITDA margin we are expecting.
Sir, any specific reason why our space revenue is coming down due to any new program or anything else?
Yeah, nothing like that. Actually, if you look at the orders are not placed, they are placed cyclically. Like for example, typically the orders are given or the programs are approved for Department of Space once. So they calculated, they give for say for next 2 years they may give one order, or next so many launch vehicles they may be giving orders. So it is not that it is going down, it is a cyclical. So probably this year it means 24-25 would have been low. Maybe next year it may be more again. And we are also expecting order from space. It is in pipeline in the final levels of order negotiations and all. So we are also expecting from them.
Okay, sir. And sir, are we supplying any material for missile technology also? From any material for missile like a Pinaka or anything, BrahMos type of missile?
Absolutely, we are supplying. In fact, we are the lead suppliers for them.
Okay. And because demand is very high for export market, especially for BrahMos and Pinaka, so do you see any hike in for demand for this one?
The moment they get order, we also get order from them.
Okay. And motamoti, how much is sir nearby for one BrahMos? How much the value of material is supplied, for example?
That is difficult to tell.
Say they order for the total numbers. Okay, we cannot say how much is the value. Okay.
Agree, sir. And so last time we are speaking. As you say, you are again starting this one making barrel, because earlier you were making some barrel for artillery barrel. So are we started or we are looking to start again for barrel making?
We are also in discussion in supply of that gun barrel. Okay. So still we are not finalized that order. So shortly, maybe in the next quarter, we will be able to tell what is the position of that order.
Right, sir. Right, sir. Thank you, sir. Thank you. This is helpful, sir.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Pritesh Chheda from Lucky Investment. Please proceed.
Sir, I wanted to know about the capex that we have done in the last 5-7 years, where your gross block has added about 700-800 crores. So let's say in the nickel-based alloys and the titanium-based alloys, which are your two product line segments, how much capital have gone there, and if you can tell us the capacity utilizations of both of these areas, so that we can understand what kind of revenue potential is yet to be captured, because since the last 5-7 years, we haven't seen any movement in your EBITDA line, hardly any movement in your revenue line.
So if you see that whatever capex I put, because of that only, in the year 23-24, we could able to have a growth of about 20%. In 24-25, we could able to sustain the same set of growth. So now we started giving and we started stabilizing those units and we started giving result. And now year on year, there is a possibility that there will be a growth of about 20% year on year. So now those got whatever investment we have done over the 4-5 years, now only it is started giving result. So we'll be able to do it.
So the last leg, whatever you have spent, this 600 crores, that all has gone in titanium alloys?
No. Actually, out of 800 crores, whatever we have spent in 5 years, the major capex we have spent on white plate mill, which is about 600 crores. Okay. That is WPM we had put as a strategic facility to meet import substitution. Because of that only, we could able to do most of the titanium plates which have been otherwise imported, we could able to do it. So that we cannot expect so much of revenue growth from that WPM unit immediately. Now we started stabilizing that WPM unit to develop most of the imported products. Recently we rolled aluminium, which for aero sector, which otherwise it was getting imported, and worldwide also it is not available with some more products.
Yes. So if you look at what our Director of Production and Marketing was telling, All aluminum alloys or hard aluminum alloys used in aerospace industry are imported currently. There is no Indian manufacturer who can manufacture 2000, 6000 and 7000 series alloys of width more than 1 meter. Now using the WBM, we have initiated some experimental trials, okay, of one of the aero grade alloy, and we could successfully process the plate. So what I am saying is basically there is a lot of opportunity in white plate rolling mill, which has taken about 400 to 500 crores investment, and we are trying to see how best we can use the mill for newer products.
Okay. So basically out of 800, 600 had gone in white plate mill and 200 crores has gone in
other facilities like melt, bar and wire, other downstream facilities.
Okay. So when you mention this 200 to 250 tons per month of titanium, even that's a white metal. So what do you refer to that? Do you refer to base titanium sponge, or what do you refer to when you say this capacity?
This capacity is basically to produce titanium alloy of various forms, various grades.
Probably.
Okay.
One line I think probably I would like to add. Titanium sponge is different. That is the raw material that goes into the melting of titanium alloy. That is indigenously is available at a plant in Chavara in Kerala, okay, which manufactures about 500 tons per annum of titanium sponge. We are importing titanium sponge, okay, and sponge is not in the product line of MIDHANI. MIDHANI makes titanium alloys from sponge.
And from alloy, the plates are made, or then alloy is sold as alloy?
MIDHANI is capable of making both bar and plate products.
Okay. So basically, can you tell the capacity utilization here in plate mill and titanium alloy? And what's your capacity utilization in nickel in FY25?
The plate mill, as I told, that the capacity utilization is not full because it has been made for the strategic purpose. Okay, now in the process of development, as it has been explained, maybe coming years it will come to the full-fledged production. Okay, full-fledged production. With respect to the titanium shop, as I told, last year we had some problem in supplying of the master alloy. We took about 6 months in development of the master alloy because of the geopolitical situation. So this year, this financial year 25-26, we will be able to use 100% of its capacity.
Okay, and nickel?
Nickel, already we added now whatever requirement of nickel alloy, super alloy, that we are all doing 100% whatever order position is there.
Okay.
It is doing in the other beam furnace.
Okay. So the plate mill and the titanium alloy, it's fair to assume that capacity utilization will be extremely low at 15-20%?
Actually, in the year, not this year, it will become a titanium shop of 25-26, it will become 100%. And plate mill will take some more time to have achieved 100%.
No, it was 15-20% in FY24. That was I was referring to.
You are telling 24-25.
Reported here.
No, 1 minute. Let us separate the titanium, super alloy and white plate mill. Super alloy currently we are having full utilization. Titanium alloy full utilization. Only white plate mill, because it is meant for strategic applications of rolling white plates of margin steel and other critical aerospace grade material. The load to that is not to that extent. Okay, so but that is why we are diversifying our portfolio to make it as usage as possible.
Titanium alloy, how much utilization you said? That number was unaudible.
Full utilization.
Full. Okay, understood. And this 600 crore capex of white plate mill, what is the asset turn on this? Can be the asset turn?
Sorry? Asset? Can you please come back?
Asset turnover. So 600 crore investment that you do.
No, that's what we are talking about. Currently, the supply segment from the white plate mill is less, very less. 600 crore the investment in, the returns will take some time. Currently, we don't have the returns right from as expected. So maybe over a period down the line in 2 years, we can definitely expect some good amount of that. That will also strengthen the overall business of the company, because we are having more hopes on that. It will take some time.
Okay. And the last question, 25% margin number that you refer to, the coming year, or that you refer as a number which will come over years as and when the plate will get utilized?
No, that's all. Without the plate mill we are expecting minimum around 20 to 24, 25% EBITDA margins without the white plate mill. If when the white plate mill comes into a full swing, then definitely our margins will go up drastically.
Okay. So 20% growth and 25% margin. Okay.
Without considering the full mill.
Without. Yeah. Okay, sir. Thank you.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line. The next question is from the line of Mohit Loya. Over to you, sir.
Yeah, hi. Thanks for the opportunity. So I just want to know one thing. Recently CCS has approved a space-based surveillance satellite SBS-3 program. How large this opportunity can be for MIDHANI over the years?
Okay. See, with respect to, you are talking about new satellite. The satellite has to be launched by a launch vehicle, and we are the suppliers of the launch vehicle materials, and whatever launch has been announced, certainly our products will be there in the launch vehicle.
Right. So the overall program cost is about, I guess, if I'm not wrong, it's about $3 billion USD. So roughly it translates about 25,000 crores. How large this opportunity can be for us?
So we launch vehicle. We see with respect to if it is order normally is placed by ISRO or MIDHANI. Okay. So it depends on not one launch vehicle, it is multiple launch vehicles. With respect to the satellite you are talking about, we do not know which launch vehicle they are using. So we have to see how much order they will put on us. And we are the sole supplier of marine steel plates to ISRO. So we expect correspondingly whatever they have planned, we are expecting the orders from them.
Yeah, sure, sir. That's it from my side.
Thank you. The next question is from the line of Aman from ProfitGate. Please proceed.
Hi, sir. Thank you for the follow-up. Seeking clarification on the question of previous participant. So you highlighted that the capacity in titanium alloy and super alloy is operating at 100% already in FY25, and the EBITDA margins will improve from current 20% to 25% without any scale-up in white plate mill. So wanted to understand triggers of the EBITDA margin improving despite share of defense going higher, which is a low margin product for us.
Yes, currently even in the FY24 also we are at 23% plus the EBITDA margin. So 25% is expected for FY26, what we talked about, is because definitely the volumes, operational efficiencies, as DKM's Director Production has already explained, we are more exploring that using the scrap, like recovering the elements or the raw materials from the scrap and using it rather than the working product, which will definitely have a positive impact on our raw material consumption cost, which is the major contributor in the total cost. So these all will definitely contribute to take that 2% margins which we are talking about, without considering the white plate mill and all, which may take us some time. But once the white plate mill comes, then definitely the margins will be around 30%, but definitely not at 25%, it will definitely be more. But that will take some time. We are not expecting that to happen in FY26.
Okay. And just to clarify, titanium alloy and super alloy capacities are already working at almost 100% in FY25 as well, right?
Our booking is for 100%. So we'll be able to utilize all our equipment in the financial year 25-26 to meet the requirement, because we are having a high-end order in both the titanium and super alloy.
So for FY25, how much was the utilization?
Mr. Aman. may we request you to join the question queue again?
Sure.
Thank you. Due to time constraints, that was the last question. I would now like to hand the conference over to Dr. Murthy for the closing comments. Thank you, and over to you, sir.
Thank you. Thank you once again to all our investors for joining today's conference call and for all your continuous trust and support on MIDHANI. We are proud of what MIDHANI has accomplished in FY24-25. As we move on to 25-26, with our strong order book, expanding export footprint, and investment in next generation newer alloys that we are developing, as well as for sustained growth. If you have any further questions, you please feel free to contact our company secretary. We wish you from MIDHANI side a pleasant day. Thank you.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Okay.